From NFTs to DAOs, what is the future of Web3? We continue with our paradigm shift at Yahoo Finance All Markets Summit Extra Asia 2022. And it is with great pleasure we dive into this huge pool of technology innovation with our next panelists. Let us welcome right now Alfian Sharafuddin, DBS Bank's Managing Director and Head of Technology and Operations in Hong Kong and mainland China. We have Jaehan Chu, co-founder and managing partner at Kinetic Capital. And we have Eddie Lau, CEO and executive director of Arta TechFin. And it's really great to have all of you guys here. Welcome, everyone.
Thank you.
Well, thanks for having us.
Thank you.
Okay, so our theme is paradigm shift. Y'all know that. So we all have experienced paradigm shifts in a very personal way, in a very professional way, in a very global way. So it's very thematic and very apropos for 2022. And let me just start with this question for everyone. What would you say is the most significant paradigm shift you've experienced in the crypto sphere, the blockchain sphere, digital assets, Web3 space these past 12 to 18 months? And Jaehan, I'm going to start with you.
Thank you. Thanks again for having me. I think one of the most impactful ones, we can't ignore the recent events of the Terra Luna crash, subsequent kind of Three Arrows Capital crash, and all the kind of knock-on effects, number of institutions kind of going down. I think the paradigm shift and the takeaway is that as amazing as blockchain technology is, as kind of revolutionary as cryptocurrency is, I think that the industry itself still has a long way to go in terms of being a stable and globally scalable platform. I think that we've learned a lot of lessons and will continue to learn these lessons, but the institutionalization of the space, the maturation and the evolution, I think, towards a combination, maybe even a hybrid of Web 2 and Web 3 from the business side as well as the technology side is probably the most likely scenario, rather than in the near term, a fully decentralized, fully open, fully disintermediated ecosystem that we were promised.
Alfian, I bet you probably have a lot of thoughts about that, especially if, to Jaehan's point, we're seeing both the business participation in the innovation push. In your view, from your perch at DBS, what do you think has been the most significant paradigm shift in this space in the past year or so?
Sure. Thank you for having me. So I kind of agree with Jaehan. So one of the big things we are seeing in the whole NFT Web 3.0 space is actually the underlying technology. So from a bank's perspective, we're really very excited because, for the first time, not only are we seeing this whole decentralized ecosystem, but I think the underlying technology of blockchain is really going to be very, very useful for the banking sector. I mean, one of the fundamental constructs of banking is always requiring a middleman or a settlement house, someone in the middle who many parties trust to do the finality of settlement. And it's actually a very cumbersome process. So today, when you try to clear checks or when you try to do international payments, it takes, from couple of hours to up to 2 days or even 3 days if it's a more complicated transaction. And what we've seen being enabled by the underlying fundamental technology of blockchain is that finality of settlement, comes down to a matter of milliseconds or even seconds, or, in the worst case, minutes. And that we believe will fundamentally revolutionize the speed and the ubiquity at which transactions can be performed all over the globe. And we, for one, are quite excited by what that shift will mean for our banking industry.
And it's a very interesting time where all of this is happening. So the cross-section of this innovation, as Jaehan pointed out, this is also, a lot of macroeconomic headwinds. There's been contagion. Some serious damage has been done, not only in terms of wealth destruction for those who've been impacted by 3AC and Celsius and et cetera, but also the perception of this space, right? To note, monthly NFT sales fell below 1 billion for the first time since we've seen in the past 12 months, and NFT artists are now getting their first major test since crypto's collapse. How are you all seeing the market right now? And how are you almost navigating this negative sentiment as you move forward with either investments or innovation?
Interesting. I mean, the space of DeFi and in fact CeFi has always been dominated by the non-banks, right? And people always felt that it's sort of a way to get away from the centralized organizations. At DBS, last year, actually, we launched our digital exchange, and we allow trading of the majors, Bitcoin, Ethereum, a couple of other coins. And I think what we found is that, we sort of occupy this sweet spot, because for our, accredited investors, they actually now have a place where, they can trade and custodize their large holdings of crypto in an institution that they trust, right? Because they've been working with us for many, many years. We're a regulated entity, being a bank. And therefore, we kind of have found that sweet spot where, people need to find this place of safety. And they find that if they put their crypto CeFis, well, as some of the organizations out there have shown us, it's actually not that safe as people thought. So we find that, now people are saying, hey, I want to be active in this space, but where's a place that I can feel safe being active in this space? And our DDEX that we launched, it's actually one of those places, and we're finding an uptick of activity, actually. So it's quite an interesting development for us. Sorry, Jehan.
Yeah, no worries. I'm not sure I agree with all of that. I think that, part of the reason why, an institutional platform like DBS can be safe is because the type of products that they offer are more conservative. And the types of products that people actually want to invest in are higher risk and higher reward. I would love it if you guys would offer 20%, yield on stablecoin deposits as Anchor was, but that's not what you do, right? And so I think that the lesson that was learned is that, with great, kind of reward comes great risk, and that's kind of one of the takeaways. Now, to your question, Angie, I think what we're seeing as venture capitalists ourselves, the market is actually still, there's an overcurrent and an undercurrent. The overcurrent is that there's a great pullback. There are a lot of firms that are pausing writing checks into startups and pulling back in their investments. Everyone's definitely being a lot more cautious. But the undercurrent is that firms who have been in the space and understand and have kind of committed capital are continuing to pile in. They're continuing to do really large deals in strong companies.
But what you're talking about, Jehan, and what I love that we're talking about right now, is what are the fundamental basis of value that exist in the ecosystem? That's what's really, really exciting. And so we can talk about, the gyrations and the volatility and the contagion in the market, but that wipes away a lot of the projects that were teetering, and it reduces and sharpens the focus to see the projects that are actually healthy. Yeah, Eddie, what were you going to say?
Yeah, I was about to say, completely agree with Jehan. We see so much demand from institutional clients and also corporate clients to start offering or even thinking about to offer security tokens. That's something that the regulator have to approve. So simply put, if you want to borrow money or you want to lend money, you can put it on tokens, except that this time you can go to the regulator and ask for approval. And people are doing that. So that I think last month there were two security token offering that are privately placed. They were done in Hong Kong. So maybe the amount of crypto native token will go up and down. But one thing for sure is the amount of regulated or regulator approved security token will go up.
Oh, I wanted to follow on that a little bit more, Eddie. How are you creating new applications of NFT, of tokens in the equity space, in the asset space that's kind of different for a lot of people. How are you unleashing value?
Right, exactly like what you say, Angie. You mentioned the value proposition or the true value that blockchain can offer, or cryptography can offer to the world. So if you look at what JP Morgan has done and also what Goldman Sachs has done, one thing that blockchain can resolve is, for sure, is to make your settlement quicker and faster and more transparent. So I was a trader 20 years ago. I was, when we buy a bond, we want to lend it out so that we earn the carry or repo interest. It is painful. It was paper copy, and later on become digital. And now Goldman and JP Morgan offer blockchain-based repo. It was instant, and you can do it on weekend. You don't have to wait for Monday morning to do it. So just for that, there's a huge market for the entire repo world. And now the application only restrict to EIB, which is European sovereign bonds, and also US Treasury. It will apply to every single bond. It will displace every single repo transactions that were done either on paper or via the traditional way. So I think when blockchain application can actually generate values, then people want to tokenize their securities. So to tokenize bonds is no different from tokenizing cryptos. It's the same technology. The only difference is whether, like Jahan said, would that be how he started? Actually, it was a great reminder. Is it going to be fully permissionless, where everyone can come on to mint a bond and settle a trade? Would it be permissions, where you have to be qualified, or you have to pass certain tests, or you have to be KYC, to join the network to perform your duties? I think that would be the big question.
Well, Jahan, where are you making your bets? Is it permissionless? Is it decentralized, completely decentralized layer one? Or is there permissioned regulatory rails? I mean, how are you making your bets right now?
Yeah, I mean, we've invested in over like 240 companies by now. So our kind of pattern recognition is pretty interesting and developed. And what it's led me to believe is actually that you have to keep an open mind. A lot of our peers are kind of much more invested in pure decentralization, and we also invest in decentralized platforms, whether it's like assets or NFTs or GameFi, et cetera. But we've also taken a very keen interest in the last 2 years in permissioned ledgers and permissioned chains. And probably our biggest bet is close to home in Hong Kong, which is in China's BSN, the blockchain-based services network, which is China's national blockchain infrastructure. And what that is as you can imagine, is a permissioned ecosystem of blockchains where China has basically wiped clear the notion of fully decentralized, uncensorable type of access, and created a system which fits their regulatory framework, which is permissioned. So we've invested quite heavily in that. A company called Red Date, we co-led that with Saudi Aramco, so it's gotten a lot of attention.
And Alfie and I wanted to follow up on that because DBS has done some really interesting work in blockchain and crypto, and really taking on the perspective that as one of Asia's biggest banks, to really lead in terms of innovation. How do you balance that, however, with the needs of a highly structured bank, highly regulated? You've got compliance issues that, to the nth degree, as one should in the traditional financial and institutional space, and yet at the same time really take a lead. Do you have to do policy conversations? Do you have to do regulatory conversations? How do you balance innovation at the speed of innovation, but still, you've got to represent DBS, right?
That's a very good question. And I think to Jahan's earlier challenge to my point, I mean, we can't do the 20% type of, put your money here, 100%, 20% returns year on year, simply because, you've got to take on a lot of risk. So what we have found is that within our organization, because you rightly pointed out that we are highly regulated, we really have to identify individuals who really understand the risk landscape. And we then have to set policies that, people are completely aware of, kind of like the risk dynamics at play. And because the whole space is quite new, right? The whole concept of DeFi, the ownership of the transaction on a blockchain, what is off blockchain, what is on blockchain, we tend to, at the moment, have to take a slightly slower speed than, what's out there in the wild, right? Because what's out there in the wild, people can take more risks, right? They can go and push the envelope until they break. And when they break, kind of like the repercussions are huge, but kind of like some people can get away with it. For a regulated entity like us, we cannot. So therefore, we've got to take very careful and measured steps. But at the same time, we allow for some small sandboxes and some small pilots to go on within a controlled environment, so much so that if it does fail, the failure is containable, and therefore we get to learn quite quickly. So to sum it up, we allow for a lot of experimentation, but within fixed bounds, whereby if people fail, we don't take down the whole bank or even, a significant or even any significant portion of it. That's what we do, a lot of experimentation.
Yeah. Experimentation is important because it gives us a lot of data. And then it's how you execute on top of that learning. What do you guys think about NFTs right now? We saw the mass rush and hype and adoption, and it was very, very exciting. And as I mentioned earlier, that has definitely cooled. What is the next wave of NFT applications that you're excited about?
Well,
Eddie, I'll start with you.
Yeah, we're working with, funnily enough, so many Web2 people. We call it Web2 populations. In fact, the Web2 old guard have been, the corporates, the instos, business people who are excited about issuing their NFTs, and for their customers. Actually, they don't just do it for branding. It used to be just, hey, I'm in a metaverse and I'm doing an NFT. You can download and all this. Those are more branding, right? Now we're putting it to real business. What it means is, say, all of us will travel again. We go to a hotel, we can pay by Bitcoins, and also your memberships will be on NFT, and all your activities will be tracked. And guess what? You spend money here, you put a good comments there, it's all on blockchain. And for that, we'll reward you again on blockchain. So, and your NFT will be upgraded now, given all your contributions, it'll look better, I'm sure. So we're doing a lot of projects for corporates in the regions to make their business blockchain enabled, and so that their clients can have NFTs and can make, actually, in fact, they will feel more belongings to the branding. That's the big next wave. And in fact, this is not the next one. I think it's the current one.
Yeah, so my sense is that people will get more selective on the NFTs they actually purchase and that takes off. So I sense that, quite a number of those NFTs out there without a true utility will probably go to the wayside. For an NFT project to succeed, the underlying smart contract, I feel, has to have some useful value. So we've seen a lot of metaverse land out there, right? That actually has value because you can rent it out, you can build stuff on it. So those types of NFT will, I think, live for a long time and will actually increase in value. Those that provide membership to certain clubs, certain exclusive clubs, those will increase in value. Those that accrue royalty to people, I think those will increase in value. The type of NFTs that you just mint and you try to sell and kind of like the greater fool theory, I think that won't work. So it's quite important to be very discerning, in my view, of what NFTs actually bring value to the individual or to a use case. And then those, I think, have quite a good future.
Yeah, but I want to emphasize, while NFT prices move up and down, and sometimes move up a lot and then have gone down a lot, I'm actually a little bit, I'm not, what's the right way to put it? I don't think there's a definitive answer on the greater fool theory or who come first and pump and dump later, that kind of trading. I do think that a lot of Web3 communities or the Web3 NFTs they do carry a lot of values and actually culture. I mean, it's not something that, it's a bit like when we were in high school, where like we have a lot of good friends, and then we have a lot alumni book, and people have common memories and collective values. Except that this time it happens online. It happens in the Web3 world, and they created a community where they will use your NFT and they love it and they pay for it. So I think there is a lot of real NFT in the world that are branded as not real. And there are a lot of great community that we are actually currently working with to bring the Web2 people into Web3. I mean, we can't just bring in Web2 people by moving them, giving them an NFT and hope that they will become an NFT native. We need the Web3 people to educate them, and that's what we're doing.
Yeah, for NFTs, I mean, I agree with most of what's been said. I think that from the content NFT side, we've just gone through the first cycle, just like we went through the first kind of cycle of crypto in 2017 with the kind of boom and bust. And, there's going to be a lot of casualties, a lot of people left with a lot of useless, worthless kind of NFTs. And that's the game. People will always come back to the casino. And I think that, in the next bull run, we'll see the exact same thing happen again. It'll just be different NFTs. But that's, again, that's the sideshow. That's not the real kind of, headliner. The real headliner is data. And I'm surprised that nobody's really talking about this, but data NFTs are absolutely 100% the future. NFTs are not things, they're just capsules. And the most valuable thing you can put inside of it is data. One of our companies, Snickerdoodle, they're basically replacing browser-based cookies with user data NFTs. And in all of these kind of NFTs, we're looking for fundamental value and utility. What could be more useful than being able to establish user profiles, user preferences, user incentives, privacy in the Web3 space, where all you have is an address and you have no idea who's behind it. So these types of things, whether it's user data or enterprise data, financial data, industrial data, all of these types of kind of next generation NFTs, I think will really be data NFTs, and it won't be about speculators and retail. It's actually going to be all industry. And I think we're going to kind of, revolutionize and rethink the way that data structures exist from the Web2 world into a more distributed, open, transparent Web3 world.
Absolutely, I agree, Jahan. We're putting our partner managers or fund managers and some instos, we're putting them on blockchain, and to exactly like what you said. We're getting the track records on blockchain. We're getting the risk exposure and the trading style on blockchain. It's all data. It's all data driven, and we machine learn how they behave, and then we ask for their approval. Again, it's their data, and once they approve, we'll actually show it to the world on how good or how bad they perform. So data driven NFT is the future.
And the difference here is that if I'm the owner of my own NFT with my own digital identity and my own data, that I could trade that in terms of value, either in a membership or if I'm getting something in exchange, but that would be clear to me. And that my data is, I own it and I can share it if I want to. That's a very interesting application of it. It's one that almost the society demands. It's what we're all really frustrated by, the Web 2 version, and where Web 3 might be leading us.
Yeah, and also you get paid for it. You get paid for it. You get rewarded for sharing your data.
Yeah, exactly. The related to this whole BSN thing, the founder, Yifan He, he likes to talk about these public IT systems and how we're actually going to evolve to the point where it will be, he likes to imagine that eventually, within 10 to 20 years, it will be illegal for large technology companies to store user data. They will be required to hold it in public IT systems where the users have their own keys. And, if you take like GDPR to its extreme and you fast forward it, that's actually perfectly, that's exactly right. Our user data will be held in public IT systems that we individually have control over, and we grant or not access to it. And Facebook, WeChat or Tencent, they won't actually be allowed to hold our data anymore, and they won't want to. They don't want to hold it now.
I mean, that would. I mean, this is what everybody wants. The companies don't want to because the liability is too great. The privacy issue, all the rest that comes with centralized spaces that could potentially be hacked. They don't want to deal with that. And we want, the individuals want we want our digital data back. We want our digital identity back. I love where this conversation going. So if we're going to extrapolate where the future is going, NFTs has a real interesting value beyond art, beyond all the things that we're seeing right now. So that was an interesting exploration. But before I end this conversation, what about DAOs? How do you guys feel about DAOs? For our audience, this is where anyone can participate in an organization and vote, essentially. It's democratized decision-making for a specific project. Jahan, are you interested in DAOs? Are you investing in DAOs? What do you think of it?
Yeah, I'm kind of bearish on DAOs, actually. I know there's a lot of interest in them. I think conceptually they're incredible, but I think that the kind of investment in DAOs is a bit ahead of its time. A lot of the DAOs that I've seen are kind of community experiments rather than community businesses, and there's a big difference. And a lot of the dynamics we see are that out of a DAO of 1,000 people or 800 people, there's like 5 to 10 people that do all the work, make all the decisions and all the leadership. And for an investment DAO, that's just called a venture cap. That's just called VC. I think that it's not a tooling issue. There's a lot of great tools out there that make it easy, that help to coordinate, all the voting, all the governance, et cetera. The problem is that people are either too lazy, too disinterested in actual governance, or not incentivized enough to really kind of participate. And that's the double-edged sword of democracy. It requires people to actually spend and invest their own time to become educated and involved. And not everybody wants to. Some people just kind of want a free ride. And actually, that's actually most people. So until DAOs can really solve the participation problem or find mechanisms to actually make it easier and increase participation, I think DAOs haven't really found their product market fit yet. I do think that DAOs are creating really interesting tools. And again, I would go back to the hybrid model. I think the lessons and the tools and the ideas of DAOs will be incorporated into centralized structures to make centralized Web2 structures slightly more democratic and slightly more kind of publicly community and governance oriented, rather than fully, DAO decentralized.
Eddie, I'll let you have the last word on DAOs.
Well, well said. I would say, just like Jahan say, when you only have a few folks within the DAO to do work, it's not sustainable. At the same time, for those who can make decisions, if they're investment decisions, the direction of the regulator is they need to be regulated. So it's a real conversion between the Web2 and Web3 world in this respect, I think. Ultimately, investment driven type of DAO will be regulated.
I think one thing is really, really clear, and Jahan, I'll borrow your phrasing. It is about a hybrid. This feels more like a long tail evolution. And as the innovation keeps moving forward, there is also pulling best practices from the traditional world. And somewhere in between lives this world, which is the future that you're all a part of. And audience, thank you for joining us on this. And Alfian, Eddie, Jahan, thank you for giving us a glimpse of this future that you're investing in, that you're building on, and that you're helping pull enterprises into. I really appreciate you all joining today.
Well, my pleasure.
No problem. Thank you for having us.
Thank you.
And audience, again, so many rich conversations here. I hope that you got really so many seeds of understanding that will blossom into a fuller, more insightful vision of what the future holds. And for more of these conversations from the All Markets Summit. All you have to do is click on Yahoo Finance web pages.